Hello, this is a mic test. So, hello guys, this is the Forex webinar series that I'm starting. And before I give any introductions and start off with the thing, I'll just wait a few seconds, or let's say a minute or two, and let's see the audience. In the meantime, let me open up the chat thing on another page. Hmm. You guys are online, just type in hi or something in the comment section, either on YouTube or TradingView, wherever you are viewing it. I have the chat open on both terminals. So, hi John, I can see you, and thank you Madhavji for the comment. So, now that we have an audience, let's quickly start off with the webinar. People who want to join later can join later. Let's not waste any further time waiting. So, let me give you a quick formal introduction. My name is Neerav, and I'm the founder of this website called 50eyes.com. Also, the YouTube channel 50 Eyes Market Analysis, where I have been publishing my views on basically all the major markets in the world, forex, stocks, commodities, cryptos, etc., etc. I am a professional trader, and my area of expertise is Elliott Wave, which is advanced form of price action analysis. Most importantly, I have been keeping a compilation of my forecasts all over the years for last 6+ years. And as you can see on my website, my accuracy for 2016 stands at 83.34, 2017 87, 2018 84, 2019 84, 2020 88, and 2021 82. So it's 6-year track record of 80% plus accuracy, which is, in my understanding and my knowledge so far, is the highest in the industry. So that's for my quick introduction, right? Now heading on to the webinar. Before we start off with the webinar, let me give you or show you the quick disclaimer suggesting here that all content presented will be for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit loss or loss of profit. So Twinkle is also online. Thank you for the comment on YouTube. So now that we are done with the disclaimer and the quick introduction, the way we will proceed with this webinar is, so first of all, I have been doing these monthly webinars so far, but I will try to do these more regularly, which I'm going to call as, let's say, during trading sessions webinar. So I haven't figured out a proper name for it, but let's just say Forex indexes, Forex and indices updates, something. So the idea would be to do these webinars maybe um, once or thrice per week within the trading sessions. It could also be once per day, but that will obviously depend on the audience I get, right? So that's the main theme I'm going with, and the coverage I will try to actually focus more on the forex markets, which is something which I'm also trading these days. So the coverage will be focused from the forex, and then we'll cover indices and commodities as well. So this will be the first one in those daily webinar series which we are planning, right? So you guys do share it once it's complete. So I have prepared a analysis on some euro pairs, right? So we'll first check them out and then some other things. And just before we finally continue, just tell me if the audio is clear or not, right? Just give me one quick confirmation if you are able to hear my audios on both platforms, on YouTube as well as TradingView. Okay, thank you Twinkle on, and thank you and John on YouTube, and thank you Madhavji on TradingView. So let me just quickly start off on Euro USD, right? Very heavy activity on it for the past few days. Well, generally it is heavy activity, one of the most traded pairs out there. So this is the daily chart of Euro USD, and if we remove everything, this is our point of reference. The date is around 7th of January 2021. From there on, I have a sort of impulse coming to the downside is what my count is. So let's see what my real count actually is. So those of you not much familiar with Elliott Wave, I'll just quickly like to tell you that in Elliott Wave, we look at things in fives and threes. So an impulse down is basically a 5-wave progression to the downside, right? So a 5-wave progression to the downside would basically be something like this: 1, 2, 3, 4, and 5. So the first one you will call, let's say, a double bracketed 1, double bracketed 2 to the upside, double bracket 3 to the downside. And then there are some rules and guidelines which we will not go into detail because this is not a class on Elliott Wave, right? But if we compare this rough diagram with this diagram, we will find that 1 is here, and then we'll find that 2 is here, right? From then on, we should have a 3 or C to the downside, right? If there's a 3 or C to the downside, then the 3 or C, which is this leg, if we magnify this wave 3 double bracket, we will again find 5 waves inside of it like this. Now, because within the 5 waves, if you pick up 1, 3, or 5, they again will have 5 waves. This is basically called the fractal nature in Elliott wave. For those who are new, I'll just emphasize again, this wave 1, wave 3, and wave 5, all three of them will have 5 waves inside of them. So this is the basically fractal nature of Elliott wave, because if you magnify this 3, it will look like this, right? And then within this 3 will again have 5 inside of it. Probably you get the point. Even if you don't get it, don't stress on it. It's not much relevant. Just focus on these impulses here. And the main outlook I am coming to is, one second, let me get rid of it. Yeah. So the main idea that we are coming to as of now is that this double bracket 3 or C is still remaining, right? So if the double bracket 3 or C is still having one leg to the downside remaining, that means we should see a movement which should take this market possibly lower than the last low of roughly speaking around 0.95374, right? So if this analysis is correct, if this count is being followed by the market, then we can expect this market to take out the last low at least once. That's what this analysis is suggesting. But analysis keep changing all the time based on the market information we get. Right? It is possible that I may have to redo this whole analysis. So what can we take away from this whole thing right now? Right now, there is a setup forming here. So let's check that. So right now you can see here that we have this single bracket 1, single bracket 2, single bracket 3 over here, right? So that suggests that single bracket 4 is in the formation. Again, the same concept applies. If 1 is here and 2 is here, then after the 3 there will be a 4, right? And we know a few things about this 4. We know that the wave 4 single bracket will generally retrace to the 38.2% retracement level of this wave down, right? So basically that means if I draw a fib retracement from the starting point of single bracket wave 2 to the ending point of single bracket wave 3, the 38.2 will come around this level which I have already marked, 1.04471 roughly, right? So around this 1.04471 level, we are expecting that this market can take a resistance and possibly form a reversal. Now with this point in our mind that this market can form a reversal at this blue line, we can now think of our trade setup. For that, let me go to some lower time frame. 4 hours will do. So on this 4-hour time frame, we have a WXY progression to the upside is what I have the labeling currently as. And within the WXY progression, again, I'll just quickly show you what the WXY is in the rough region here. So a WXY progression basically means that you have a wave W to the upside, a wave X to the downside. Wave X can have many formations. I'm just drawing the one which I think is forming here. And then wave Y to the upside. So if you look at it, the W has 3 waves in it. This one goes up, this one goes down, and this one goes up. This is called an A up, B down, and C up. So the A up, B down, and C up, they complete or come together to form the W. Then this is the connecting wave X, right? This is the one which joins the W with the Y. And this is the wave Y. Just like W, it will again have an A up, B down, and C up. So both W and Y have 3 waves. They are called A, B, and C, and they look roughly like this, right? So at this point, our analysis is suggesting 2 variations. Always keep in mind that Elliott waves is a form of analysis which looks into possibilities or probabilities, right? So that's our agenda here. We want to just look at the various different probabilities that can be happening in this market. So first probability is that this X is complete here, right? If this X is complete here, then focusing on this chart again, let me remove everything. If the X is complete here, then as I just said, it will have an A up, a B down, and then a C up. So in that case, this will be your A up, this will be your B down, and this will be your C up, right? C up means that we are very close to the end of the movement to the upside. If this count is correct, again, I'm emphasizing the fact. So if this is the count being followed, then this is suggestive that the C up is possibly either complete or just about to get completed, right? Then the next thing we can do is we can form a corrective price channel 0 to B from A, but it isn't really helping us because the market has already gone higher than the corrective price channel, right? So in this case, what we will do is we will try to go on a lower time frame and try to decipher the movement within this price action, right? So if we go on a lower time frame, let's say we go to, currently we are on 4H, so 1H should be fine. So on 1H, this was the X. On 1H, we realize that if this is the A, this is the B, Then this is our count for the C. 1 up, 2 down, 3 up, 4 down, and 5 up remaining. So this is your wave 1 up, this is your wave 2 down, wave 3 up, wave 4 down, and wave 5 is remaining, is what this count is suggesting, right? So there is another possibility here, right? Because this is a very, what do you call, sort of end of the end of C. This is like we are in the ending of a certain pattern. It is possible that the wave 5 may have itself completed something like a very unclear looking structure. Wave 3 is smaller, and then wave 5 is getting even smaller, and it's complete, right? So that is a possibility, right? Now that I have talked with you about the possibilities, now let me tell you what the actual setup which I am thinking right now can be played out here is. So first of all, we can go with the simple fact that if 3 was here and if 4 is here, then if the market goes and takes out this last high, not last high, I mean this important level of 1.03499, then we can assume that wave 5 is possibly remaining and go for some very short term intraday long, right? But keeping in mind that the position size should be small, because this short term intraday long will be a counter trend trade, because as soon as the C completes, there will be a bigger down move, right? So that's our first trade setup, a counter trend trade setup, which will give us very small upward movement as per our analysis. Second is, we don't really care where this C ends. If the C is complete here or here, we don't care. We simply draw this trend line, 0 to be trend line, and we wait for it to be broken to the downside, right? That will be what you call a conservative trade setup, right? And obviously in this waiting, you will also lose this price movement, and your stop loss will get bigger because of that. So these are the two main setups from this count, where we have assumed that the wave X is complete around the level of 0.97319. So if you guys are clear, or if you guys understood this setup so far, then we can just look at the second possibility here. Just type in that understood or clear, something like that, in the comment section, right? And then I'll move on to the next possibility on euro. Okay, Madhaji is saying good. What about the other participants? Twinkle, John, and JP Daher, who has also joined on TradingView. Let me, more participation would be better. Okay, one second. I'm not able to load my stream of YouTube. So let me just quickly reconnect on YouTube and see if there is any comments or updates there, and then we'll discuss the second possibility. Okay, so John says understood all that, and Ray also says good. So now let's continue with the Khal is saying breaking wave 4 in wave C, we can use it as a turn. Yes, we can, Khalid. That will become a, what do you call, a little bit aggressive setup. That's doable. And there's a comment on TradingView. Let's check that. Swan is saying, when are you looking for a long position? When are you looking for a long? So we are not looking for a long as of yet. But anyways, my second analysis will put a little bit more emphasis on the bullish scenario. So anyways, that was the analysis which was suggesting that the shorts are very near, right? And yeah, one point which you should keep in mind, 38.2 retracement, which I was talking about a little bit earlier, for this single bracket wave 4, definitely keep in mind it is very near. It is at 1.04424. So if the market really is following this count, then it is quite likely quite likely, heavily likely, that it will go there and take a turn very near to this level, this blue line, right? So keep this blue line in mind, no matter what kind of analysis or setup you are following. This 4 should be moved here. So that was our first outlook, which was suggesting a lot of bearishness, only short-term upside movement, but that was very risky, as we just discussed. Where the hell is 2 here? What is it even doing there? Okay. So yeah, that was the first setup, or first possibility. Now let's look at the second possibility. So what we discussed right now was the X being here. Remember, W here, X here, and Y here. Now the second possibility is that the X is not here, but the X is over here. Now it should be much better. So last time X was here, and this time I'm saying X is not here, but over here. Okay. So now that changes things a little bit. And yes, we can consider that. I will not get into the details of why and whatnot. Those who are even mildly familiar with Elliott Wave can understand why I'm taking the second X possibility. So in the second possibility, if X is here, remember when I first talked about WXY, I told very clearly that the wave Y will have a structure something like this: A up, B down, and C up. A up, B down, and C up, right? So if the X is over here, then that means we are only going up in the A wave. Either the A is complete here, or the last leg which we were suggesting or talking about is remaining to the upside. It is over here, right? Now, if whatever is the case, if the A wave is the one which is getting complete or is completed, that means there will be a small pullback or a pullback, let's just say, not necessarily small. But most importantly, it will be followed by a leg in the upside direction, because it will be a B as a pullback and C in the other direction to complete the wave Y here, right? So this was not very complex. I just considered the possibility of a different X position of X wave, right? Which suggests that a stronger up leg for wave C might be remaining, right? So just let me know if you guys understood it, and then we will discuss some other nuances in it. Just a quick Y or yes will do, not a very detailed. Okay, so I have some yes and understood from Ray and John, sorry, and same from TradingView Madhavji. So now keep in mind that there was also that 38.2 line which was over here. Let me just draw that with the drawing tool as well. Now if we check this out, it may, okay, it was here. It may become clear without even saying that if the wave C is remaining, then the possibility becomes that it might take out the high, or not the high, the 38.2 level, sorry. So if the wave X is here, then it looks possible that the 38.2 level will be taken out to the upside, right? So generally, as I said, what the observation has been of mine for so many years is generally the market does reverse near the 38.2. It sort of does it like very, very, very often. But it's not a rule, obviously, it's just a guideline and my observation, right? So based on that observation or guideline, whatever you would say, or whatever you would like to say, we can assume that this second possibility of wave X is a bit less likely scenario. And the first possibility of wave X over here is a bit more likely scenario. Again, getting back to the reasoning was that I generally expect the market to turn around 38. So based on that, I'm assuming that this is the more likely scenario and this is the less. Obviously, keep both of them in mind, right? And it is also possible the market is doing none of these things, and we will have a completely different count in a few days, but that's the fun part of trading. Okay, so that was my outlook on euro against the US dollar. Now finally just type in yes, and then we will move on to some other euro related pairs. That will be, and also if you have any questions on this chart, euro US dollar, just type them in. I'll just wait for a few seconds. Magnus is saying yes. What about other guys? I see that the participation on TradingView is rather low. Madhavji is saying yes. Okay, so I'll just move on to the next charts. No point in waiting. So next, let's discuss some other Euro pairs, right? And let's see which one I have. EURCAD. It's an interesting one. 4 hours chart. So I have not done a very higher time frame analysis, the top down approach. Instead, what I have been doing here is just a very short term analysis. Euro NZD, please. Yeah, John, I have not really checked any pair related to NZD. I'm just covering the trading the most, the ones like Euro against the US and Euro against the CAD. NZD, I have not even checked. So maybe next time we'll cover it. But for now, we will have to leave it. So I was saying Euro against the Canadian dollar. My short term analysis starts from this point around 25th August when the market was around 1.28785, right? So this is our point of reference or the starting point for this count. What is the trading view ID to watch broadcast? Hari is asking. Hari, my trading view ID is just my name, Neerav Yadav. So I'll just type it in the YouTube chat as well. There you go. So now what I was saying was Euro against the Canadian dollar. I have not done a very top-down approach, but only the short-term approach I am taking here, right? In the short-term analysis, I was able to figure out that there looks like we have a possible leading diagonal formation. Then again, a leading diagonal, for those of you not much familiar with Elliott wave, is a pattern which has a 5-wave structure of overlapping wave 1 and wave 4. So basically, it would look something like this: wave 1, wave 2, 3, 4, and 5. So now if you observe the 4 and the 1, you will figure out that they have a clear overlap here, right? You know what, let me just try using a different color. Yeah, now you can see that the 4 and the 1, they have a clear overlap, right? So this is what you would call generally a leading diagonal formation, or let's just say diagonal formation, because ending diagonals also will have similar structure. There are a few nuances, but let's not get into that right now. So if we look at the actual price action, I have already labeled it simply wave 1 up, 2 down, 3 up, 4 down, and 5 up, right? So if this count is correct, then we are currently in the wave 5th. So that means our point of discussion should be starting from this wave 4 low, right? So let's do that. Let's go to the early chart from 4H and check this last leg up. Now, one thing I would like to point out before I discuss that, it is possible, although it is less likely, that the 3 is here, but the 4 is just continuing. And the 4 comes here and then it goes up for the 5th. It will still be a diagonal, right? And it will still follow all the rules and guidelines of a diagonal. But it will give you a sort of confusion if you had not considered this possibility. Right, so just keep in mind this 4, it is possible that it's already complete here, but don't forget wave 4s are very deceptive by their very nature, and hence it may very well just be over here, right? Anywho's, let's look at the count we have on screen. So the count I have is that considering the fact that wave 4 is complete, right? We have the wave A complete here, B complete here, and C is still going in the other direction. Now the thing with wave 5s is, in a diagonal, rarely ever there will be a failed wave 5th. I have encountered once in Nasdaq and once again it was some other script. But generally speaking, these things are not, wave 5s generally do not fail. in what do you call 1 second. So what I'm saying is that wave 5 generally do not fail in a diagonal structure. So the possibility simply arises that the wave 3 high should be taken out, right? But then if we look at it, the wave 3 high is already taken out. So that leaves us very small room for considering other things. So basically what I'm suggesting is that possibly wave 5 is either complete, it has small upside remaining, but that is not a clear trade setup here. So then we will have to fall back on the larger time frame chart. And on the larger time frame chart, the setup becomes that once you see a break of this trend line, you should expect some more down leg, something like this. Once again, A, B, and C. So this is the rough, what do you call, outlook which you will look out for in case of a diagonal structure. But then again, I'm not very happy with it because there's a lot of price action you leave behind. And that means your stop loss will be very big and the reward will be very small. So from a short-term perspective, what I'm looking for is, I'm looking for a break of this green channel, right? Once the market exits this green channel, and I'm just placing an alert on TradingView. If you guys are not familiar, TradingView allows you to put alerts on channels, and then you can select exiting channel, entering channel, etc. So I just set up an alert for exiting the channel. So once this market exits this channel, I will look out for some short-term sell-off and possibly some trades on the downside. And interestingly, even if this thing was still continuing as a wave 4, like A, B, and C, it would still be a valid setup because I'm looking for sell-off. And even if it's completing a wave 4 or having the C leg of wave 4 down, it will still be a sell-off. So that works out for me, or in this case, works out for this analysis. So that's my take on Euro USD. Look for short-term sell-off, but only at the break of this green channel, right? And I've also discussed the two main scenarios that we had. Any questions on your USD? If you don't have any questions, type in understood or clear or yes. I'll wait for a few seconds and refresh the chat here. I'm seeing 59 people are online on TradingView, but the participation is rather small in the comments. Okay, on YouTube there is comments, understood EURCAD, thank you John, and Magnus is clear. Thank you Magnus for the comments. So guys, there is also this like button on the live streams, both on TradingView as well as YouTube. So hit that because the algorithms of these platforms, they like that. I mean, they promote you if you have a good number of likes. And we need a lot of participations to continue doing these webinars. So the current level of participation is minimal to say. So hit those like buttons and definitely share these webinars once it is complete. Share it in the trading communities if you have joined some groups or something. And if you have social medias like Twitter handles, etc., share it. Again, the social media algorithms of Twitter, etc., they what do you call, push the content higher if multiple people are sharing the same link, right? So if 10 people share the same webinar link, then the algorithm will push it a little bit higher. So we need visibility here. So Gangapati is saying, please share TradingView account. Yeah, Gangapati, my name is the TradingView account. I have written it in chat. Let me just redo it in case you have missed it. There you go. That's my TradingView handle. So I believe that's all for the comments. Let's move on to the next chart. Which is the next one? EURUSD was a very complex chart. Just give me 1 second. What I'll do is I'll just check out which ones are the clear ones. And just discuss them. Oh, that's an interesting one. So if you guys are following me on YouTube or TradingView since before, you remember that I keep doing these Applied Elliott Wave webinars, which are monthly webinars. And in the last one, I did this analysis of US dollar against the Japanese yen. and the market was somewhere here. I don't really remember. So let's just do quickly one small thing. This is an interesting one. Just pay some attention here. That's you will like what you will see. I can promise that. So I'm just trying to check what I exactly said in the last webinar on Euro USD, on USDJPY, sorry. So this is the last webinar, 38th Applied Elliott Wave Webinar, streamed 8 days ago. And because it is time stamped, so I can just simply go over to USDJPY. So that's a neat thing YouTube does. So 42 minutes, I'm talking about USDJPY. So let's check that. And always turn the stream quality to 1080p if you are watching on YouTube, past recording. The 720 etc. look really bad because we are using black backgrounds. So yeah, John, we will discuss oil after this one. Okay, so this is the webinar or streamed 8 days ago, both on TradingView as well as YouTube. So I'm just showing it so that we have a reference. The market was trading around 146.651. And I have clearly mentioned here that we are looking for a sell-off below this trend line, below this yellow trend line, right? So it's already visible here, and you can also go in and check the YouTube video if you want, right? So now we know that that's what we suggested in the last webinar, and now let's look at the chart so that you understand the point or my statement, like why I was saying it will still be an interesting one. So 146.651, and this is the yellow trend line, right? So 146.6 will be somewhere here, right? Somewhere here. Yeah, it is almost here, 146.60, right? And the yellow trend line is already broken. Okay, it's broken to the downside over here. And the market did fall. Not only did it fall, it even surpassed our expectations. My expectation was that this wave Y will possibly be like stopping at this channel line, right? This blue channel line or CN color channel line. It even surpassed that downside target. So that is in front of you, the exceptional power of Elliott waves, right? So that was a setup we discussed last time, right? And if I were to update it, let me see. By the way, if you guys like what you see, if you like the fact that we were able to catch this big down move beforehand, do show your reactions in the comment section. In the meantime, let me see what is the current count on this thing. John is saying on YouTube that was a great trade, USGPI. Yes, yes, John. I hope some of you guys were able to catch it as well in live session. Okay, guys, so this is the updated view on USDJPY. Minuscule submicro. John is saying yes, so that means he was able to catch it. That's good. So I think this rather fits pretty well. WXYY is complete, getting back inside the channel and as a middle trend line. So there is a next thing is if the WXY is complete, then the market should go higher, right? Only other possibility is that it is continuing downside again as a W, X, Y, X, Z. This will be a case of a triple zigzag, right? So there are two possibilities: either the X is complete here and then the Y is complete and the correction is complete and it will go up. Let me change the color. So this possibility is suggesting it will go up, and the second possibility is suggesting that if the X is complete here, sorry, the second possibility is suggesting that the second X is continuing here and then there will be a leg down, right? So basically short term wise we can look for some longs, but as I said, if another X is continuing then it can just see more sell off. It is unclear to me if the another X or the WXY XZ is forming or if the Y is already complete. Only time can tell that, so I will not comment much on that. It's a wait and watch on this one, but short term wise, yes, short term wise we can look for some long opportunities here. That's undoubtedly there. Only short term longs, and swing wise, as I said, it could go like this or it could go like that. So let me change the color again. Yeah, so orange and blue, these are the two possibilities. That was our understanding of the current scenario in US dollar against Japanese yen. So if you guys have any questions, you can type them in the chats right now. Again, on both TradingView as well as YouTube, I'm watching the comments. So I'll wait for a few seconds. And if you guys understood the analysis we did on USDJPY and liked it, just type in yes, or basically just show me a reaction so that I know people are here and watching it. Magnus is saying fully understood. John is saying no question. Ray is saying no. Ganpati is saying, sir, any idea on new wave by? So Ganpati, I don't follow all that stuff. Elliott Wave works. I have 80% plus accuracy for 6+ years. Why do you even need something other than that? Just use the things that work, right? I don't know. I just use Elliott Wave. It's completely working for me and it is quite complex in itself. Right? Don't consume knowledge for the sake of consuming knowledge. Consume knowledge for the sake of applying it. Use what works. Don't care what else exists. Anyways, that's my theory or philosophy. So there is a comment. L_F is saying looks good on TradingView. So that's our understanding of USDJPY. Let's quickly check another thing. Thank you, Ray, for that reaction. I don't know what that actually is. What does that hand signify anyways? Is that a slap? Anyways, so oil, yeah, that's what we are going to cover, John. Oil. Where is oil? There is oil. Oil. 1H. 4H. And the chart is this one. Oh, 1 second. The chart is here. I have moved it lower, I think. There it is. 1 second. Let me rearrange the charts. I have a lot of them here. There is the oil chart we are following. 4H. Right. So again, oil is something we have always been discussing in our monthly Applied Elliott Wave Webinar series. So Hari is saying it's a clap, I think, and Ray is saying it's a high five. Oh, that's a high five. That's good. Looks pretty similar to a slap. Anyways, so now let's quickly check what I said about the oil market in the last webinar that I did. The US 30 lucky FD. So lucky, let me see if we can cover S&P 500. Dow Jones I haven't checked, so maybe in the next webinar we'll do it. And yeah, those of you guys who are watching it live for the first time, I'm planning to do this webinar series regularly, which is once, not once, 2 to 3 times per week, or maybe even once per day in the weekly trading session. So for that, a lot of likes, comments, and shares are required. I still see that the TradingView stream is having 0 likes. Okay. Anyways, let's quickly check the YouTube link. Where is that? I think I have closed it, so I'll just reopen it again. me just open it over here and then go over there. John is saying target was 98. Yeah, that is already marked 98 point something level. So I just want to check what was the price level when we did that exact analysis. So my YouTube handle is 50 eyes market analysis. And this is the 38th Applied Elliott Wave Webinar streamed 9 days ago. That's funny. It was saying 8 days ago, just a while ago. Where is crude oil? The first thing. Okay, so crude oil. Let me just go ahead a little bit. Come on, man. Where's the? Yeah, so that's our analysis on crude oil. Yeah, the analysis was that either it will go up straight for 3 or C, or it will go down and then up, like the B was still continuing. These were the two possibilities, right? And the target, as John has already mentioned in the YouTube chat, was 98.25. So keeping that in mind, let's look at crude oil now. Let me just scan if there was something else I said. I guess that's about it. So yeah, now let's look at the price now. So it seems to have been, 1 second. I did forget to check the exact price. 93.818 wave 1 high. So 93.818, that means the market was over here. And it looks like the possibility where wave 2 or B was still continuing is the one which is playing out. So because wave 2 or B was still continuing, right? That means this is the case of a here, a B here, and a C here, right? And if this is the case of A, B, and C, then that means this is the case of a flat structure. Once the flat is complete, then we will see the upward movement. So that means the longs are still there, the longs are valid. And what I'll do is I'll put my alert over here. So once this alert is taken out to the upside, greater than 90.287 on the O&A price data feed, which is a CFD feed, then I will look for longs. Again, keep in mind, guys, the prices will vary a little bit. If you are checking the actual NYMEX chart, on the actual NYMEX chart, the price is currently around 87.77. And on this O&A feed, the price is 88.040. So do check that at your end, which chart you are using. So anyways, the point is that the longs are still valid. I think that the wave 2 or B may have completed here. But the second thing is that if by any chance the wave C is not complete here and the wave C is continuing, then it is possible that we may have a stop loss hit and then we will have to re-enter. So the matter or the fact of the story here is that the possibility for longs, as per my understanding, is still here. I personally will look to re-enter longs around. Actually, by the way, guys, I'm already long here on this market as we talk, right? So I don't like to discuss my complete positions, but because my analysis was long, so I'm long here. So the fact of the matter is, if it takes out this low, that will be considered a stop loss hit. Then I'll wait for a while, let it complete the 5 lakhs, right? That will be considered the C, and then I'll look to re-enter the longs again. So the my bias remains that even if the stop loss is hit, the direction still remains the same, right? So that's our take. Firstly, I'll go or look for re-entering longs or adding more around 90 plus 90.249, right? But if in case it breaks the low of 85.27, then I'll consider this as a loser, take out my positions in a loss, and then wait for it to complete the C leg down, and then reevaluate the situation and then re-enter longs, right? Again, that's my take on crude oil. We are still maintaining the long scenario on crude oil. So that was it for crude oil. I don't think there was anything complex in it. If you guys have any comments, queries, etc., just type it. If you don't have any comments or queries and have understood whatever I was saying, just type in CLEAR, clear, right? I'll wait for a few seconds before I move on to gold, which is again an interesting chart to discuss. I see Magnus is typed clear on YouTube. Very low participation of trading view still. But anywho, so what about you, John, Ray, Ganpati, Madhavji? Are you guys still online? I don't see your comments. John says understood. Understand. So yeah, let's in that case move on to gold instead of waiting for any further comments. I guess everybody is clear. Where is the chart of gold? Yeah, this is the chart of gold that I am analyzing. So very quickly, let's raise saying yes, and Ganpati is saying yes, sir, clear. Thank you, Ganpati and Ray, for your kind feedback. And let's check when was gold discussed. Gold was discussed at 11:20 in the last webinar. Again, guys, I'm referring to my last Applied Elliott Wave webinar, which is the monthly webinar series that I've been doing for so many years. And let's just quickly check what I was saying about gold in that last webinar. So the price was around 1680 when this webinar was conducted. It was a weekend, so obviously the market was not moving. And 1680, my view was that this market should either take out this last high or it will go sideways. But I remember very clearly in both these cases, my view was that it will take out this trend line at least for once. It has to take out the trend line. So basically, we had short-term long opportunities. The minimum target was that this trend line should be taken out, right? And the maximum upside target was that at least this high will be taken out, which was around 1730 something, roughly speaking, right? So you guys can watch this. Yeah, this is it. A up, B down, sorry, ABC up. And this is the BD scenario. We had multiple discussions here. We'll discuss that again, but you guys get the point. 1727. So this is the last recording. 1727 was expected to be taken out in case of an ABC. Now let's head on to the actual chart of gold. And as you see, 8 days later, 1727 has definitely been taken out. So the analysis played out picture perfect. Again, if you guys were long, good for you. You made money. You should have stayed a short on gold at 1727. Let me see. Did I suggest a short on gold at 1727? Okay, 1727. No, the idea was that at least it will take out this trend line and it will then take out this last high. And above that, we will look for shorting opportunities. Let me come back to that. It was not a 1727 short. I don't think I will make a statement like that. Yeah, but 1727, from that point, we will start looking for shorts because that zigzag will become sort of completed. We'll do the minimum target. So let's check that on the actual chart. Gold. So firstly, it did go higher and it has taken out this last high, right? Now, let's look at the count. So the count is suggesting that we have, let me remove this trend. So we have either an A here, A or 1, B or 2, and then C or 3, right? Now, if in case of C or 3, we expect that the market will have 5 waves, right? Either it's wave C or either it's wave 3. Both these markets will have 5 waves inside of them, right? So 5 waves basically, I mean, you all know what 5 waves looks like so far. 1 here, 2 here, right? So we are currently in this third, right? And then there will be a fourth and then the fifth. So my understanding right now is that we are in this third wave and this third wave has one leg up remaining. After this one leg up, we will have some correction and then the next leg up. And at that point, we can say that possibly the C or 3 is complete, right? And at that point comes the argument. If it's a C, then we can start looking for a selling opportunity. If it's a 3, then obviously there will be some sideways movement, then another up leg, right? But our main assumption was that this was possibly a C. So what we can do at that point is we can then draw the 2-4 trend line and then we can look for some short-term sell-off, right? Now, why am I saying short-term sell-off and not complete sell-off for this big leg? Because we need some clarification if this is a C or if this is a 3, right? We cannot just go outright and say that, yeah, because we want a bigger move, we will assume it as a C. At that point, you are just gambling and not seeing the possibilities as they should be seen from Elliott Wave perspective or trader's perspective. So, as I said, we will wait for this. Actually, why wait for it? There is some short-term longs we can even take for this. Even as I talk, after this webinar, probably I will look to consider if the opportunity is still remaining. So some short-term longs for this double bracket 3 and then there's double bracket 5. We can look for that, right? Short-term intraday longs. Once the same is complete, right? Once this count is complete, right? Then we look for some possibilities of a sell-off. I'll just post it for the sake of what you call record keeping. Right, guys. So that was the view on gold. If you have any further analysis, what do you call query or doubt, just push it in the comment section. I'm waiting for you guys to comment. Right? Hashtag gold. Hashtag gold. Longs. And yeah, there's one more thing. You should follow me on Twitter because the next webinar, whenever I do, I will release a quick update. Emails are very what are emails? Very slow. People sometimes don't open them for a day or two. So the faster media of communication is Twitter, right? So my handle on Twitter is at the rate of 50 eyes, 50 underscore eyes. So that's my handle on Twitter. I'll just type it in. Or you can also just visit my profile. Every link is listed there, both on TradingView as well as YouTube. So I see comments are possible reach of gold is about 1800. What is 1800? Possible reach of gold is about 1800. Generally, we look for the 1:1 targets. I think it is already achieved. Obviously, it is already achieved, not think. Next, we will look for the 38.2. 138.2 is again obviously already achieved. Next, we'll look for 161.8, which is 1802.04. So, yes, what is it? Nicolet1, yes, your comment is pretty much in accordance with what I'm seeing over here. It is a strong possible target, 1802.04, so 1800. Yeah, that's a possible target. From there on, we will look for considering possible shorts. So that was my quick look on gold. And let me check other comments. There are some comments. Ganpati is asking view on Nifty. John is saying understood on gold, all clear. Ray. And Ray is again saying, I think it means nice. And no comments on trading view. Although I see 89 are views. Okay, views is different than online. I thought that TradingView would have more views, which is funny because it's a website dedicated to traders. Yeah. Anyways, you never know how these things work. I'll just post my Twitter handle on my YouTube comments. Okay, so let's now move on to the next chart. We have already touched the 1 hour mark, right? Right, 1 hour mark. So that means this should be our last chart, right? We already discussed a lot of charts. And guys, hit the like button. Definitely hit it. On YouTube, I see only 4 likes so far. Although there are 10 people who are live, it looks like. And TradingView, I won't comment because the participation looks lower there. But on YouTube, at least hit the like, guys. Right? And before we move on to the last charts, make sure you share these webinar links so that I can continue doing them on a more regular basis. Right? If you want me to appear just about every day, make sure you share it in your groups or at least at 3 places, right? For higher visibility. So Nicolette is saying thank you. Ganpati is saying, sir, can you differentiate between ABC wave and impulse wave? Ganpati, let's wait and watch on gold, and as it happens, it will be better, because if I say anything now, it will mostly be theory. But because we are going to apply the same concept on actual chart of gold, let's see how it goes. There I'll be able to give you better clarification. S&P's 500. S&P's 500. So I remember it very clearly. My outlook was that if by 8th November, right, session, if this market is not able to go lower than 3570 or whatever this low is, 3500, right? If by 8th November the market is not able to go below 3500 level, then we are possibly going to see some upside. That was my view on S&P's 500, right? And if you guys want to check it again, I'll just check it very quickly on the YouTube. This is the YouTube video, the 38th Applied Elliott Wave Webinar recording, which was conducted 8 days ago. And S&P was discussed at 18 minutes 10 seconds. So S&P 18 minutes 10 seconds. Let me see where I did that. Proprietary time analysis sounds so cool. Where was it? So TradingView is YouTube is taking a lot of time loading the video, which is weird. Is my feed still online, or is it a internet issue? What's going on? Anybody just a comment that I'm online, like yes, you are online or something like that. Okay, Magnus is saying online. Okay, that means I'm online. So see guys, I'm not able to find out the exact point where I said 8th November. So, but it's a 3-4 minute discussion on S&P. I think we did not take much time, or maybe 10 minutes, so who knows. So you guys can check it by yourselves, right? Later on in the recording of this. But because I said it, so I remember that if by 8th November session end in the US market, we did not take out the low of 3500, then that means S&P has some upside remaining or sideways movement remaining. That is exactly the statement I made. So with that in, there it is. Is it or is it not? So I don't want to waste time. You can just check it at your end later on. So where was it? November, 8 November was here. The session ended. We did not cross the 3500 lower. And as you can see, the market did go higher. So the analysis placed out actually picture perfect. And now you might be asking, how can somebody benefit from this analysis, right? Because the analysis was that if it did not go lower than 3500 by 8 November, then the market will either remain sideways or go higher, right? So you will be like, Neerav, how do I make money from something that will either remain sideways or go higher, right? Or maybe not, right? Maybe some of you already know. So you can just create some option strategies, right? You can just sell the puts around 3600, right? And then buy some puts to cover possibilities of abrupt down move. So sell some puts and buy some puts here. So if you sell these ones for $1,000, you can buy these ones for maybe 600, and then you can make 400. I'm just giving you a rough idea. You get my point, right? Option strategies. That's the idea. So you could have created some spreads over here and made use of this analysis. If anybody of you did manage to take this idea and actually materialize it, you can type in the comment sections. That will be nice to know. Lina is saying online, Parihari is saying you're online and live. Okay, so that means that was the analysis of S&P last time. It worked out picture perfect. That's what I wanted to show off, right? And because there are some people who have joined in later on, I'll just like to quickly show off my other stuff. What do you call standard marketing stuff is that I have 80% plus accuracy for so many years. My forecast accuracy page. Basically, I think I have tried to check, but I couldn't find somebody else who has a public forecast accuracy for 6+ years. So this will be the 7th year. We haven't complied 7th year. 80%, 16, 87, 17, 84, 19, 84, 19, and 88, 2020, and 82, 2021. So we have an exceptional track record. I'm also the author of Think with the Markets, right? You can get that book on Amazon. All the links are visible here. I also have a video course as well as my live training programs where I teach what I'm actually doing here, right? And now that I have done the basic introduction, the marketing stuff for the second time in this webinar. So if you have any questions on that, you can ask me, but now let's move on to the actual agenda. So our actual agenda was that we were trying to cover S&P's 500, right? Now S&P's 500, because it is going up, let's see what possibilities are here for this market. So the first possibility is that from this point of reference, which was around 48.28, we have a wave A here, right? And if the B was complete here, then the C was complete here, then it will just go higher, right? Now, at this point in time, I do not know that if the C is complete here, right? And I do not want to take that as a strong possibility either, because this C is not much lower than the A, right? Generally, C's, they go at their 61.8 of A or 1:1, right? So 1:1 is definitely somewhere here. So that is the reason I am not considering that the C is complete. If the C is not complete, that means whatever is happening after this A, whatever is happening, is just a wave B, right? We don't really care. And wave B's can form complex, triangles, zigzags, flats. And at this point, basically all these possibilities are viable. It could be a flat, right? It could not be a zigzag, that's there. It could be a complex like a W, and then X continues sideways and then goes for a Y. And it could also be a triangle. So every possibility is remaining here. So that's why I'm not going to try to figure out which one is it. Maybe in my own analysis, I'll try to do it and take some short-term trades. But for the sake of this public webinar and keeping things simple, I have kept alert at 37.43. So if the market takes out this 37.43 level to the downside, I will try and consider some short selling opportunities on this market, right? So that's my quick take on S&P. Below 37.43, we will look for selling opportunities. Remember, I'm not saying we will sell. We will just look for selling opportunities, because complex corrections can have something like this as well, where it will just take out the low and then take out the high, or go higher again, right, after taking the low. So that's my quick look on S&P, and the bias still remains unless proven wrong that we have 1 lakh downside remaining. So that's our take on S&P, right? With that, we have discussed a lot of charts. If you have any questions on S&P 500, let me know. GBP USD, what is your view? Team Yoa, how about we cover it in the next one, right? We have already crossed the 1 hour mark, right? I think some of you guys may be losing the concentration as well. And also GBP USD, I haven't looked at in extreme detail. But I have covered Euro USD as the first chart. You can use it as a reference. They have a very strong or good amount of correlation. So how was this webinar, guys? Your comments here about the webinar. And Ganpati is asking your view on Nifty, sir. Ganpati, yes, let's quickly check that, because that one I have. Where is that? Okay, so in the last webinar, which was on again done 9 days ago or 8 days ago, Nifty was discussed at 3011. Yeah, before we discuss this chart, one quick thing, guys, I'm repeating it third time. Share it, because if there are more views and more participations, I'll keep doing these webinars every day, right? The current idea is that I'll do them 2-3 times in a week, right? And I'll release the updates on my Twitter handle, which is, where is my Twitter handle? I should probably post it in the YouTubes as well. So my Twitter handle, I'll just go through my, 1 second, guys, let me just show you the Twitter handle for those of you who might want to follow about section. Oh, there it is. 50eyes.com, sorry, twitter.com/50_eyes. So the idea is that whenever I do the next webinar, I'll just post the link here, and Twitter is much faster compared to emails, right? So for the next webinar, look out on Twitter, okay? And also on TradingView, I'll post some intermediate updates for these charts, which we just discussed, okay? And if you share it on your Twitter or Facebook or whatever other social media you use, that will be highly appreciated. At least 3 shares from each of you. I think 12 are online on YouTube, and 92 views on TradingView so far. So that means even if each of you share 3 times, that will be like 300 plus shares. So that will increase the visibility, and that way I will be able to do these webinars more regularly. So if I have genuinely helped you, which I believe I have, then definitely share it as a reciprocation of the same. So that's about it. And now let's check our last chart. And there are some comments. Let me quickly check that. Where do you spot on future chart? Sometimes future charts wait for overlaps with one not in spot chart. Yes, Hari, it's a good idea to check 2 charts. Jill is saying appreciate the analysis. Welcome, Jill. So yeah, Hari, it is generally a good idea to check both of the charts, but the problem which you will face again is sometimes, as you just mentioned yourselves, one will contradict the other view. So what I will recommend is that you also consider the international markets in perspective, like the S&Ps and other indices, because it has a correlation with them, as you already know, right? So if you consider all of that, like just take one of the charts from Nifty, either the future or the spot, right? And then consider it in correlation with the international markets, that would be better. Okay. So I guess that answers your question. Where was that? So yeah, in the chart of Nifty, let me just quickly see. Yeah, so we were looking at wave 5, which will go upward, right? Wave 5 can go to the channel. That's what I was saying here. And even if it does not go to the channel, 18,300 was a very, very high probability target. I remember it very clearly, and it's also marked here. If you still want to check it, you can check the recording 38th Applied Elliott Wave Webinar on my YouTube channel, 50 Eyes Market Analysis. Okay. So because wave 5 was remaining to the upside and 18,300 was the minimalistic target to the upside, now let's have a quick look at the actual chart and see if it actually went higher or what did really happen. Right. Now let's head on and open up the chart of Nifty. So as you can see, guys, it actually went to 18,300, right? It took a resistance there very near to that level, and then it went lower, right? So that analysis played out again, picture perfect on Nifty 50, right? After that, what we have over here is that the wave 4 is complete and the fifth wave is going in the upward direction, right? So if the fifth wave is going in the upward direction, again, there are 2 things to consider. First of all, this Roman 3 is here, right? That Roman 4 can still be continuing. I think it may be continuing as a flat, right? If that's the case, then wave 5 will come after the pullback. That's our scenario 1. And the second scenario is low probability scenario that the 5 is already complete and it will fall. So if it will fall, I do not have any confirmation until it crosses lower than 17,784. Okay. So long story short, if it goes below 17,784, then we will consider that the 5 is possibly complete here. Unless it does that, we are considering that the wave 4 is possibly continuing and then it will go one more leg higher. That's my quick outlook on Nifty, guys. So Hari, I think that answers your query, right? Also, guys, hit the likes, share it, etc., etc. I've said it too many times, and I will see you very quickly in the next webinar. Hopefully tomorrow or day after tomorrow, depending on the market movements, right? How these markets move and how quickly they need an update. Also keep an eye on TradingView. I'll post the intermediate chart updates here, right? And that will be about it from me. Authar Singh, hey man. And I'll just quickly check the comments if there was, if there is any doubt regarding whatever we discussed so far, this will be a time to just post it. So I'll just wait for a few seconds before closing the stream. Ganpati is saying thank you. Very welcome, Ganpati. John is saying see you and thank you. Welcome, John. And I guess that's about it, guys. Have a good time and see you in the next one. Bye.